Good morning, everyone. JJ here at Micro E Futures. A little bit of a weekend update for you now that we've hit all-time highs. We've got a new contract. That stuff's over. Now what? So I've got a daily candle chart here. I've been watching this 57.80 and a quarter. These are adjusted for the new contract. And, we took out the old high, put in a new one, but this time we failed to get over 87 quarter, really. And this time we looked above it and came back in. Now, one day does not make a market, like a very famous man from Spear Leeds and Kellogg once said. So one day does not make a market. What do we look for next? Well, just looking at a candle, straight candle chart, what I would do is I'd go and take a look at this level right here. It's around 57.30. And generally, most of the inventory is underneath that level. And you'll see that that corresponds with the level on the market profile charts where you can actually see the inventory in the market profiles. Um, looking at the volume profile to the left, you can see that all of the position basically is underneath us. Um, what usually happens in these instances when a market makes a new high, the shorts will be trapped under 57, 30, 30, 35, 36, and they will come and cover holding price up. They'll be bid to cover in that area. It allows the traders who are long in these areas here to unload inventory up here. So what I'm looking for is kind of sideways action to distribute this inventory up here for profit because after all, that's why we call it a market. So for those of you traders who are short, right, over the weekend, 57.80 really is your line in the sand. I'd be watching that level. And if we can't start offering above there, then you're okay. If we start offering over 57.80, then you're in trouble. Right. And these are for the larger traders who trade larger time frames, longer time frames, larger size. Let's go take a look at the market profile. And here we go, seeing the same inventory under that 57.37 half area. We looked underneath it and failed on Friday. All right. I'll be looking for distribution in this area between 57.37 and 5800, 57.80. I think there's our 57.80 that we saw on the candle chart. Here's that 57.37 half that we saw. We can see all of that inventory is underneath. So look for this going into month end. Remember, month end now has people trapped short, really underneath 57.16, and more recent trap shorts are into 57.37 because we saw us look underneath. Look at the amount of time and volume spent above 57.37 versus below, right? So even though we did have some liquidation, we did manage closing up over the day lows of Friday. Interesting, right? Remember, there's only one day and one night of trapped long inventory over 57.58, right? Because really there's not much inventory, there's nothing up here to sell into, right? Nobody has a cost basis other than this amount of time that it took to distribute. So look for more distribution this way. If we break 37, great. You have a case for 57.16, right? That's where you're going to find some responsive buying. Okay. Let's go and take a look at the market profile on a bit of a more in detailed look. There's that all-time high, just right above 5,800 or 57.98 and change. These are all your upper stops, from a couple of days ago. That's the overnight inventory from Thursday night. There's Friday's trading, Friday's high. I've got the stops here. Friday's cost basis is 57.50 to 57.66. It's not a very large cost basis. Most of the volume is priced here at 62. So you could see that there was liquidation from the previous day and the overnight, and it was bought here. But every time we went underneath that 57, 38 area, which happened to be where the J spike was from the Fed, right? You'll notice that, our E period hit it to the tick. So that's really where the shorts are trapped going into Globex. You'll see the late day shorts are trapped under that K low at 57.42 and the high 57.50s. Now, here's the thing. How do you translate where the shorts are trapped into useful, practical trade information? Say Globex opens and it starts moving down and it takes out the O stop, it takes out the stop from L and gets out a cost basis of Friday, right? Say there's some selling, right? And you're short. Well, that area, that K high and the E high, these are places that you would look to do some covering, right? Because say you shorted, say it opened at 56, couldn't get back up to the close, you take a short, right? Because there's a seller. Seller helps create more selling, selling begets selling, pushes price underneath cost basis. There's your target one, there's your target two. Okay. That helps you. Also, if you miss the short and you get down here to 44, don't initiate here until it takes out that stop and guns for that one. Because it could usually take that stop and come back up. Because when you take out a stop, it's like opening a door to the store and the buyers are pushed up against that door. So that when a market takes a stop, you can actually tell a lot about the order flow. You don't need any fancy software. Just watch the offer at that level. If the market offers down there and then all of a sudden you see the offer start moving up, well, the sellers have found buyers and they're going to increase price. Just common sense. Okay. Let's use a little common sense, right? Let's make common sense sexy again. Okay. Let's make risk management sexy again. All right. So that's how you use it in a practical manner, right? If the market starts consolidating here, you can maybe look to take a long back up. Okay. But just remember that if the market opens and you're long, well, your first set of stops above that O open, the point of control from Friday is here, and the N high, those would be your targets, right? Because that's where the sellers who are long here are going to sell into it where the stops are, right? It's just how the business works. All right. If you want to learn how to trade, folks, with some common sense, good risk management, and a business like approach to trading where you run your trading as a small business. So, you don't have all these issues like chasing price and FOMO and all this crazy stuff, right? We'll help you with that. We'll teach you the business so you can understand why you're taking the trade. Remember, each trade is a business decision. If the business decision stops making sense, that's why you're allowed to exit that investment, that business decision, that trade. Okay? Come see us at microefutures.com. Learn how to make a living in this crazy business. We will help you. We have a very helpful community. I'm JJ. We have a 7-day free trial at microefutures.com. I hope you guys are having a wonderful, wonderful weekend. Thank you very much. And we'll see you Monday morning. Bye for now.